So swing trading is simply the catching of the major moves on the markets. If ever you want to swing trade, it's simply you're catching every swing. For example, this is a swing. There's a swing. In as much as the market will be uptrending, but you'll be catching these swing moves, especially let's say it's an uptrending market, you are mostly concerned about catching these buys more. The buys will be more of the bigger swing moves whenever you are in an uptrending market. So basically, the first thing that you need to know is the break and retest. The break and retest is simply a break and retest of either a support or a trend line. So basically, the market will be trending either uptrending or downtrending. Then, as it is moving, let's say this was an uptrending market, it's moving, traded at resistance, they came back to support, went back up again, come back down again, broke now. This time it broke that resistance. So you can either enter immediately after the break, your stop loss just below there, or you wait for this retest. Then you can also enter your trade there based on candlestick pattern confirmations like the bullish engulfing, the hammer, or any other bullish candlestick confirmation pattern there. Then you enter there, boom, then you go all the way. So basically the essence of this method here is simply either to enter immediately after the breakout or to wait for the retest. Then you enter all the way. Same as a downtrend, you just do the opposite of that. So the second thing is the trend continuation. So trend continuation is simply you identifying a trending market, whether it's uptrending or downtrending. For example, in an uptrending market, you'll be having something like this: higher highs, higher lows, higher highs, higher lows. So basically, you always want to be catching these moves here. You always want to be catching these higher lows, these higher lows, these higher lows. So these higher lows are your entry points whenever we're in an uptrend. That is where you can catch this huge swing. So that huge swing, as it is happening, you know that your TP1 is always the recent high there. Then obviously, as it goes all the way, you can even take some more profits there at the top. But what you can do in a scenario whereby, let's say, price goes up, forms a higher high like that, but now comes back and breaks this trend line. For example, here you'll be having some form of a trend line. Many people will be having some form of a trend line, meaning the trend line is broken. But basically, according to market structure, the market structure is still bullish because we are still on this higher low level. So basically what it will do here, it will go back inside like that and continue with the trend. So basically here, your first target, as I said, that is always this level here, which is your previous higher high. So basically you can also catch such moves here at the higher low there. You can even enter some trades there. Then as it comes back inside the trend line, you can also add more trades there as well, targeting this most recent higher high there as your first target. So that is the second thing. The third thing that you also need to know when it comes to swing trading is trading the counter trend. So trading the counter trend is simply you trading against a trend. For example, let's say in an uptrend, a counter trend is simply all those selling opportunities that you're seeing, all those mini selling opportunities. So basically there are two ways to go about a counter trend. Either you wait for price to come to the top of your trend line like that, and you catch obviously these higher highs here. You catch these higher highs there and sell up until price creates a higher low there. Either you can catch it like that, or you wait for a scenario whereby price comes down, forms a higher low, goes back up again, but fails to break this this high. So there, that moment as well, as a counter trend trader, you can even take some sales there, but knowing at the back of your mind that the trend, we are still in a bullish trend. So basically you're taking trades there, but obviously your target, you're looking at this first area, which is your higher low there, because the market, since we're in an uptrend, you can simply come there, then continue going with its uptrend. So basically you could have, as a counter trend trader, you could have taken advantage of that entry there, taken some profits there at the higher low. So that is the third thing. As a counter trend trader, you can also take advantage of swing trading moments like that. So the last thing now, you see, we also have what we call range market. A range market is simply a market that is not breaking highs and lows. For example, here you'll be having a scenario like this, whereby price goes to create a high there, comes back to the same low, goes back to the same high, comes back to the same low. So this is a ranging market. You can actually identify it on a daily time frame or on an H4, because that is where you can get very good swing moves. On a daily time frame, 4-hour time frame, that is where you can actually get very beautiful swing moves. So basically, this is a ranging market. So in a ranging market, you always want to make sure that the bottoms you're buying the bottoms. Obviously, wait for candlestick confirmations like the hammer, the bullish engulfing candlestick patterns. You wait for them, you enter there, your stop loss just below the range. You enter there, your stop loss just below the range. You enter there, your stop loss just below the range. You enter there, your stop loss just below the range. Same as the top. At the top, you're selling. You enter immediately after something like a shooting star, something like a bearish engulfing pattern. You enter there, your stop loss just above the range. Enter there, your stop loss just above the range. Enter there, your stop loss just above the range. So you simply wait for market to give you the confirmations, then you enter. So sometimes it won't just come down in a straight line like that. Often at times, it can even play around with people's emotions, whereby price goes up, plays around, goes up, plays around, finally till it reaches the same as going down. Sometimes it won't even like go down in a straight line, but it can actually play around with people's emotions. Sometimes it can even break out there, come back inside. So basically you actually wait for confirmations for price to give you those confirmations so that you enter into that ranging market.